subscribe to the channel and hit the bell icon. Okay students, so welcome to this second video of our financial awareness section. So students, this is the second part, and I request you to watch the first part of the video, then only come to this section. Okay, please kindly watch the first part of the video given on this I button link at the top. So you can press on the I button and get the links to the other videos. There will be total 4 parts. So first part we have done, and this is the second part. Okay. So coming to the first question, which among the following is paid to the investors out of the profits of a company in a financial year? So students, the options given are equity, debenture, dividend, stake, none of the above. So students, you must have some additional points regarding this. So students, I will be giving you the answer. Okay. So the answer here in this part is option C, dividend. So what is dividend? Dividend is the sum of money given to the investors. So these additional points are very important. Okay. Paid to the investors of a company out of its profits. Such payments can be done yearly, quarterly or monthly as well. Debentures are medium to long term debt instruments in India, whereas equity refers to the shares of a company. Hope you have got a clear idea regarding the dividend and equity. So coming to the second question, which among the following is or are the areas of operation regarding which complaints can be received by the banking ombudsman? So students, banking ombudsman scheme was introduced in the year 1995. So you have to know these important points. So students, either note this down, or it's always better to note it down. Okay, try to take a notebook and write all these important points, because these are going to be very important for your upcoming examination. So it was introduced in the year 1995 as per section 35A of the Banking Regulation Act 1949. As per section 35A of the Banking Regulation Act 1949. Banking ombudsman can be approached in order to register a complaint against deficiency in certain banking services. All scheduled banks are covered under this scheme. Now the sale of third-party products, complaints regarding mobile and online banking services. Mobile and online banking services have also been covered under this scheme. So students, hope you are clear with these multiple points. So what's the option? Option is answer E. All A, B and C comes under it. So hope you have got all the important points regarding it. Coming to the next question. Who is the appellate authority to which an appeal can be filed against any award of the banking ombudsman? The finance minister, the RBI governor, one of the deputy governors of RBI, the prime minister, none of the above. So students, what is the answer? The answer is option C, one of the deputy governors of RBI. And some of the most important extra points you have to know is any complaint filed with the banking ombudsman should be settled within 30 days from the date of such complaint, failing which an award is passed by the ombudsman. In case of grievance against the decision of the ombudsman, one can approach the appellate authority within the 30 days. So the appellate authority is vested with one of the deputy governors of the RBI, which is a very important question, and you must never skip these important points and important questions. Okay, so that's all. Coming to the next question, what is the maximum amount of compensation that can be awarded by the banking ombudsman? So students, the options given are 10 lakhs, 20 lakhs, 25 lakhs and 30 lakhs. Answer is option B, 20 lakhs. The banking ombudsman can award up to maximum amount of rupees 20 lakhs. Whereas, as you know, rupees 1 lakh can be awarded maximum towards the mental agony and harassment. So students, please note this down. the banking ombudsman can award up to maximum amount of rupees 20 lakhs, whereas rupees 1 lakh can be awarded maximum towards the mental agony and harassment. There is no fee involved in filing a complaint with the banking ombudsman in India. So there is no fee involved in filing a complaint with the banking ombudsman in India. So coming to the next question, what is the maximum award that can be imposed by the NBFC ombudsman in India as decided by the RBI? 10 lakhs, 20 lakhs, 5 lakhs, 1 lakh and 3 lakh is given. Answer is option A, rupees 10 lakh. So students, some of the extra point you have to know is the RBI has recently launched the ombudsman scheme for the NBFCs operating in India under the section 45L of the RBI Act 1934. So kindly note this 45L of RBI Act 1934. So the maximum award that can be passed by such an ombudsman will be rupees 10 lakhs. Whereas an appeal can be filed against the award within 30 days with a deputy governor of the RBI, we have said in the previous question. There is no fee involved in filing a complaint with the NBFC ombudsman. Coming to the next question, the Public Provident Fund account duration can be extended for a period of dash at once after the initial maturity period of 15 years. So what's the answer? Students, it is option B, 5 years. So the Public Provident Fund Scheme, we will call it as PPFS, okay? Public Provident Fund Scheme is a very popular scheme of the government that provides tax benefit under section 80C of the IT Act 1961. So hope you are writing it down. Kindly note the students, these are very important points. The maximum amount that will qualify for such benefit in a financial year will be rupees 1.5 lakhs, whereas the minimum amount that should be deposited to keep the account alive is rupees 500. The initial maturity period of PPF account is, the initial maturity period of PPL is 15 years, whereas it can be extended for a duration of 5 years. After that at once, and so on. Hope you are getting these important points, and finally we have done our answer. Coming to the next question, what can be the maximum tenure of term deposits in India? So students, what's the answer? Answer is option D, 10 years. So you have to know what is term deposits. Term deposits can be defined as the fixed deposits and recurring deposits. Such deposits can be opened for a maximum duration of 10 years. Hope you are getting it. Regarding the minimum duration for FDs, it can be as less as 7 days, whereas for RDS, it is generally 6 months. Though some banks allow this facility for 3 months as well. No check facility is provided for such accounts maintained with a bank. Hope you have got the important points. If you are not able to follow up, please skip back the video and watch it, okay? Coming to the next question, what is the minimum limit of withdrawal that should be allowed by banks in the basic savings bank deposits accounts? Answer is option B, 4 times a month. We will call the basic savings bank deposits account as BSBDA. Accounts are aimed at promoting financial inclusion in the country. They were earlier known as the no frills account. Very important students, no frills account, FRILS account, FRILLS, okay? No frills account, and later all such accounts were converted to BSBDA accounts. For such accounts, there is no limit on the number of deposits. There is no limit on the number of deposits in a month, but there should be at least 4 withdrawals in a month in such accounts, including the ATM withdrawals. An individual can have only one BSBDA account with one bank. So these are the important points related with this question, and you have got the answer for it. So coming to the next question, what is the maximum balance that can be allowed at any time in case of the basic savings bank deposits accounts? So students, what's the answer? So before that, let me explain to you. The total credit should not be more than rupees 1 lakh in a year in the BSBDA accounts. So that's a very important point. Whereas the maximum balance at any point of the time should not be more than rupees 50,000, which is our answer and what's the question we have asked. But you have to know some important points. The cash withdrawals and transfers in a month should not be more than rupees 10,000 in a month. Foreign remittances will not be allowed in such accounts before completing the normal KYC facilities. These accounts are normally valid for 12 months and can be extended for a period of another 12 months in case the account holder submits the proof regarding application for the KYC documents. See how much knowledge you are getting from a particular question. That is what we mean with this session. So coming to the next important question. SWIFT code is used for money transfer at international level. You all know that. It is of how many digits? So we have talked about the IFSC code in the last video, and this video it is regarding the SWIFT code. So what's it? Students, SWIFT stands for Society for Worldwide Interbank Financial Telecommunication. SWIFT stands for Society for Worldwide Interbank Financial Telecommunication. So hope you are getting it. It is a network used by the banks to transfer funds faster. It cannot transfer the funds directly, but it sends the message regarding that between institutions. It is also known as Bank Identifier Code, which is a very important point. Bank Identifier Code, BIC. So then our question is how many digits? It's actually, students, the SWIFT code can be of 8 or 11 characters. For more knowledge, you can Google it regarding the SWIFT code and all. Okay. So answer is option D, either A or C. So hope you are getting it. So let's go to the next question. If money is lent or borrowed for a period of more than 14 days, it is known as students, it is known as term money. Money market is mainly used in order to trade for duration of less than a year. Mainly unsecured loans are considered in this segment, such as call money, notice money. So what is call money? Money lent or borrowed for a single day only. Whereas notice money is money lent or borrowed for 2 days to 14 days. So that is what is called notice money. Then coming to our answer, term money, money lent or borrowed for more than 14 days to less than a year. So that is called as term money. Hope you have got all the important information regarding that question. Coming to the next one. Which among the following cannot take part in raising funds from the money market in India? So students, the money market can be tapped by the scheduled commercial banks except the regional rural banks, cooperative banks, primary dealers, etc. So what is the students? The money market can be tapped by the scheduled commercial banks except the RRBs, CBs and PDs. The funds raised are mainly used to address the mismatch of funds. The money market is used for short-term loans and trading, and that is why the risk factor is very low, here with the returns also being very less. The participants in this market need to maintain a current account with the RBI. So a current account is needed with the RBI because of the short duration of trading in this market. Hope you are writing on noting these important points. So students, our answer is RRB, option B. So please note all these important points. Please don't avoid this. We mean to increase your knowledge, not just fetching the final answer. What is the minimum denomination of the treasury bills issued by the government? Answer is option D, rupees 25,000. So the important points you have to know is, you have to know what is treasury bill. Students, treasury bills are issued by the central government in order to raise funds from the market. There are three types of treasury bills in practice now: 91 day, 180 day, and 364 day. There is no T-bill issued by the state governments as of now. So I have already told regarding there are three types of T-bills in practice now. One is 91 day, the other is 182 day, and the next is 364 day. Students, kindly note this important book and please leave a special note for writing from our channel. Not from our channel, just combine it with other notes, okay? Please do that. That will definitely help you. And regarding this question, such bills can be issued for a denomination of rupees 25,000 and the multiples of that. These bills are issued at a discount and redeemed at par. Coming to the next question, which among the following cannot issue commercial papers to raise funds from market? So what is the answer, students? It is given NABARD, SIDBI, Exim Bank, both B and C, all can raise funds. Which among the following can issue commercial papers to raise funds from the market? Answer is all can raise funds. So what are commercial papers? We have to know that. What is commercial paper? Commercial papers are unsecured money markets. Unsecured money market instruments issued in the form of the promissory notes. This was first issued in India in the year 1990. These instruments can be issued by corporates, primary dealers, and all India financial institutions such as NHB, NABARD, SIDBI, Exim Bank, ECGC, etc. Commercial papers can be issued for a minimum period of 7 days and the maximum period of 1 year. So these are the important points related with this question. So this is a very important question, students. If you are preparing for RBI Grade B and NABARD Grade A and all, this is definitely going to help you out. Coming to the next question. Who among the following can invest in the commercial papers issued in India? Individuals, FIIs, NRIs, both B and C, all A, B and C. Answer is all A, B and C. The commercial papers are unsecured money market instrument issued by corporates, primary dealers, all India financial institutions, etc. The minimum denomination of CPs, that is the commercial paper, should be rupees 5 lakhs and its multiples thereof. Individuals, banking companies, other corporate bodies, NRIs, and foreign institutional investors can invest in this CP. So all the four options given here are correct. So students, this is a very important question. Kindly note it. So without lagging, let's go to the next question. What should be the minimum duration for which a certificate of deposit can be issued? What is the answer, students? So you have to know what is certificate of deposit. A certificate of deposit, COD, is a negotiable instrument issued in 1989 for the first time, and it is issued against funds deposited with a bank or financial institution. The scheduled commercial banks, excluding the RRBs and the local area banks, and all India financial institutions can issue such CDs, certificate of deposits. The minimum amount should be rupees 1 lakh, which is written here, whereas the duration should not be less than 7 days and not more than 1 year. So these are the two conditions. So hope you are getting these 4 extra points that I have explained in this particular question. So let's move on to the next question. Which among the following can be considered as a part of the secondary market? Bombay Stock Exchange, National Stock Exchange, Multi-Commodity Stock Exchange, both A and B, all A, B and C. Answer is option E, all A, B and C. The explanation to the question is the secondary market deals with the exchange of existing or previously issued securities in India. On the other hand, the primary market is meant for trading and issuance of stocks and other securities. Trading and issuance of stocks and other securities. Equity and debt market come under the purview of the secondary market. That is why BSE, NSE, MCX all come under the secondary market only. So hope you are getting these important points. So we have already said BSE, NSE and MCX, everyone comes under the secondary market. So that's why our option goes to option C. Sorry, not option C, option E. All A, B and C are right answers. Coming to the next one, which among the following does not define a bond issued by the authorized entities? So students, options are given here. What is the answer? Which among the following does not define a bond issued by the authorized entities? Students, you have to know what is a bond. A bond is defined as a long-term debt instrument issued by the government or the companies or banks with a fixed rate of interest and a fixed maturity date as well. It is practically a loan agreement. That is what is written here. Okay. Bond is practically a loan agreement between the issuer and the purchaser, against which the issuer will pay a certain amount to the purchaser of the bond at the time of maturity. It is mainly used to raise capital from the market. So all the characteristics suits this, and E is the option. Coming to the next question, which among the following was the first to issue a Masala Bond? So do you know what is Masala Bond? Hope you all know that. So I will be explaining to you what is Masala Bond. Masala bonds are rupee denominated borrowings by the Indian entities in the overseas market. Such bonds are regulated by the Reserve Bank of India. So Masala bonds are rupee denominated borrowings by the Indian entities in the overseas market. Such bonds are regulated by the RBI. The name Masala bond was first given by the, this is also very important, which is our answer, International Finance Corporation, IFC. That is option D, which is our answer. Okay. So to represent the Indian culture and cuisine, IFC was the first to issue such bonds in order to raise capital to fund infrastructure projects in India. So to raise capital to fund infrastructure projects in India, IFC has played a role. Hope you have got the important point. So coming to another question from the bonds. Green bonds in India are regulated by which among the following? So you have to know the answer, and also you have to know what is green bond. Options given here: Reserve Bank of India, Ministry of Environment and Forest, Ministry of Finance, SEBI, none of the above. So what is a green bond? A green bond is actually a tax exempt bond agreement used to raise money from the market to fund the green projects for the development of the brownfield sites. Brownfield sites are such that they are underutilized and can be developed further. Such bonds are issued by the World Banks, various municipalities, government agencies, etc. These bonds are regulated by the SEBI, Securities and Exchange Board of India. Hope you have came to know what is green bond. So what's the answer? It's regulated by SEBI, option D. Coming to the next question, which among the following is the calculation of the borrowings of the government exclusive of the interest payment? Primary deficit, revenue primary deficit, effective primary deficit, fiscal deficit, none of the above. Students, the answer to the question is option A, primary deficit is the answer. So you have to know what is primary deficit. Let's denote it as PD, okay? So PD is defined as the fiscal deficit of a country excluding the interest payments made on the earlier borrowings. It gives us the borrowings of the current year adjusted against the interest payments made for the borrowings in the previous years. It gives us the borrowings of the government in a financial year except the interest payment. So even if you can't fetch the other points, please keep in mind the last point. It gives us the borrowings of the government in a financial year except the interest payment. So coming to the next question, a very important question. There are dash in the board of directors of the Reserve Bank of India, including the governor. I have seen this question repeatedly in several examinations. So students, the general administration of the RBI is entrusted with 21 member board of directors, which is our answer. Okay, but you have to know additional knowledge regarding each of this section. So this 21 member board of directors comprises of a governor, four deputy governor, that is I have represented here it as DG, and two representatives from the Ministry of Finance, MF. Okay, and 10 government nominated directors representing various elements of Indian economy, and 4 directors representing the 4 local boards of the bank situated in Kolkata, Mumbai, Delhi and Chennai. So students, so you have got the idea of how many members and the division and regarding the officers. That's all you have to study regarding that question. Coming to the next one, which among the following is issued by the Government of India instead of the Reserve Bank of India? All the coins, 1 rupee note, 10 rupee note, 5 rupee note, both A and B. So students, what is the answer? You can say the answer. Students, the answer is, some students draw like this, but it's wrong. They will be doing it as 1 rupee note, but it's not that. All the coins and 1 rupee note both are issued by the Government of India rather than the Reserve Bank of India. According to the section 22 of the RBI Act 1934, the RBI is the sole authority to issue banknotes in the country except the 1 rupee notes and the coins, which is the answer for our question. Except the 1 rupee note and the coins. These are issued by the Government of India. The maximum denomination for which a banknote can be issued by the RBI is rupees 10,000, and amendment to the RBI Act 1934 will be required to issue any currency above that. So the maximum denomination for which a banknote can be issued by the RBI is rupees 10,000, and amendment to RBI Act 1934 will be required to issue any currency above that. So hope you have noted these important points. So let's go to the next question. What is the maximum time period given to the states to repay the ways and means advances extended to them by the RBI? So you have to know what is ways and means advances. So students, ways and means advances are extended by the Reserve Bank of India to the states in order to help them meet the temporary mismatch in the cash flow. The states can repay the advance within a maximum period of 90 days. There is no such facility given to the central government by the central bank. So hope you are noting these important points. Ways and means advances are extended by the Reserve Bank of India to the states in order to help them meet the temporary mismatch in the cash flow. The state can repay the advance within a minimum period of 90 days. There is no such facility given to the central government by the central bank. WMA is guided by the section 1705 of the RBI Act 1934. WMA, which is Ways and Means Advances, is guided by the section 1705 of the RBI Act 1934. So what is the answer to our question? It is 3 months. That is given here as 90 days. Hope you are getting it right. Coming to the last question of this session. Which among the following constitutes the foreign exchange reserves of India as maintained by the Reserve Bank of India? So students, what is the foreign exchange reserves of India as maintained by the Reserve Bank of India? So you can see the options given here, and students, its answer is all A, B and C is the answer. Hope you are getting it. So the important point regarded with it is the RBI of India maintains the foreign exchange reserves of India. The reserves include the foreign exchange and gold. That is what I have written it as FEG, and special drawings rights with the IMF and the IMF reserve positions. The foreign exchanges are dealt within India by the authorized dealers as per the FIMMDA guidelines. So these are the only important points related with this question, and this session ends here. Thank you for watching. Please like this video if you like it, subscribe to the channel and enable the bell icon, and share this video with friends. We will meet on the next part in the upcoming days. Thank you.